have raised rates again, this time by 0.75 basis points, and the market has reacted really, really badly. And I can't stress enough where this is now the time where you should be looking to not sell your stocks, but increase your position or buy stocks that are below its intrinsic value. And if you're brand new to that type of concept, I strongly recommend that you get the OGT Investing Almanac. I'll put a link down below on where it goes into a lot more detail. But effectively, it's a guide that I've created which not only outlines my trading strategy, which looks to find companies below intrinsic value, which we're going to look at three in this video, but as well as it's got a list of ultimate resources for investing and options trading. So the way you get this is you subscribe to the YouTube channel and then head over to the community tab on the channel, and you will find the link to this guide. It's absolutely free, so make sure you check that one out. So as I mentioned in this video, what we're going to do, we're going to be going, well, I've already gone through the steps really of trying to find high quality companies below their intrinsic value. And again, if you are new to intrinsic value, what it basically means, it looks at trying to value an asset, to understand what that asset is worth and how much you should be paying for it, whether it's currently underpriced or where it's overpriced. And this line here represents that kind of fair value, intrinsic value. So again, I've got videos on this, on how I do this, and I'll be showcasing three stocks that I believe that are either below their intrinsic value or approaching their intrinsic value, and what I'm doing to not only increase my position or to start a position in these three particular stocks. So the first one is Apple. So I released a video last week of saying do not buy Apple. And what I meant by that video was do not buy Apple at the current price, because Apple has dropped by a lot and people are starting to think this is a great time to get into Apple. However, what I stressed in that video is that I believe that Apple had a fair value of, around $100. And since posting that video in the last 5 days, Apple has gone down by another 7.11%. So what I've done here is I've added my OGT intrinsic value indicator, which is completely free for TradingView. Again, the link to that will be down below and in the top right corner to understand how this indicator works. But what it does, after you set your growth rates of what you think Apple will grow over the coming 5 years, along with the return on investment you're looking for this particular asset, it will then showcase a high assumption, a medium assumption, and a low assumption of the intrinsic value of Apple. And again, there's a number of ways to do this. There are a number of videos online that will have a different view. This is my own personal view, and I've tried to be conservative. So if you look over here, we've got a high valuation of 117, a medium of 97, and a low of 82. And Apple was closed at the time of this recording at 130. So it's still got some way to go. So what I am doing now is that I am starting to sell options on Apple at a price that I believe that I want to own 100 shares of Apple. So on the left-hand side, you have the options chain. And what I mean by selling options is you're selling an option which basically says I'm willing to buy 100 shares of Apple at a price of X, in my case, where I've highlighted here, of $100 by July 22nd. So it's about a month away from today's date. And for that, I'm asking for 51 cents per share. Because we're talking about 100 shares, that's $51 in premium. So I have sold a put on Apple at $100, expiring July 22nd. At $51. So someone has paid me $51 for me to go buy Apple on or at the expiration of July 22nd at $100. And as you can see, it's somewhere in between my high and medium assumption. Considering where we were at the peaks over here, I can't remember, it's like the 170, 180 mark to go get Apple at $100, you probably would have thought that would be ridiculous. Will Apple get there? I don't know. It might do, it may not do. But if it doesn't, and this is the exact bottom at 130 and continues to rocket up, I'm fine with that. I've made $51 off of this kind of trade. So that's what I like to do. I like to sell options to acquire assets below their intrinsic value of what I do. And this is how I do this. So I'm looking to get 100 shares of Apple around the $100, well, at the $100 mark. And if this expires worthless and it's at 115, I will then sell another option, probably at 100 to get some more premium. So that's what I'm looking at on Apple. The next one is Meta, Facebook Meta platforms. They just recently changed their ticker to Meta, and Meta closed time of recording at around 160, 161. This stock has been undervalued for a long time. I've got a medium assumption at 208. It's now dropped under the low assumption of 177.65. So even buying at the at the 160 mark at the money, you can see here that we have got a premium of $10.40 per share times by 100, $1,000. So I wrote this option at 160, expiring July 22nd for $1,000. I don't own any shares in Facebook currently. I did have 40 shares back at the 200 level. I did sell those at 201 because I did feel that the market was going to go lower. So I wanted to have a put option of 100 shares in and around the 170, 160 mark. So I have a put out there. I received $1,000 at the 160 strike. So I definitely want to own 100 shares of Meta, whether it's 160, 170, 175. It doesn't really make a difference because, we are, in my opinion, significantly undervalued. And if you watch and listen to other YouTubers and look at the portfolios of some of the bigger investors, they're all still continuing to buy Meta. And if you want me to do a video on why Meta, please comment down below and I can do a full video on what I believe inside Meta's business model. The next one is PayPal. So PayPal, again, if you look at where we are, it closed at 71.23, and we're currently in between the high and medium assumption for intrinsic value. So full disclosure, I do have a put option which is expiring today, Friday, 17th of June, at the $100 mark. And I went a bit aggressive on PayPal. I didn't expect it to get there, but it did do a big fall, and I've been rolling that option out every single month, picking up net credit. But because this dropped to a new 52-week low, for me to roll it, I've got to roll it by about 6 months or something silly like that. So I'm willing to take the 100 shares at the $100, and I will be doing a covered call video most probably next week once I be assigned those shares. But I also have another put option in the market at the $65 mark, picking up just under $300 inside premium. So that the 100 and the 65 cost average that down probably nets me somewhere around the 80 mark, I would imagine, or just below $80. So I am dollar cost averaging my way in as PayPal continues to fall. I do believe that we've got significant upside. It had highs of 300 odd, which was way over the intrinsic value. But over the long term, PayPal's a beast with the huge amounts of cash flows as part of that. So those are the three stocks. Again, if you want me to do individual videos on these stocks, please shout out down below. Don't forget to check out the Investing Almanac. Again, it's absolutely free. Just subscribe and head over to the community tab, and I shall see you guys in the next video.